Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at basically some of the top performing small caps on Friday. And so first up, let's take a look at Cara, the ticker symbol CARA. And so yeah, they've been really hot last week, moving up, closed up 9% on Friday. Our RSI is at 71 right now. You've got Fasto at 92. So we'll see if it can stay above 70. It has a hard time staying above 70 on RSI, so that'd be really bullish if it could. Same thing with Fasto. As you can see, usually when it gets above 80, it tends to pull back. So it'd be it'd be a good sign of strength if it could stay above both levels. You can see it did close back above that high close resistance level from January. So this was a new high close for 2018. You know, very strong move. You know, when it formed the red candle on Thursday, it was just a pause candle. EMA 13 has been holding at 1550. As long as that's holding, the uptrend's super strong. Once there's a close below, it could consolidate. What you want to see is that 300-day simple moving average at 1429 turn into support. Check out the big volume, giant volume spike for this marijuana sector stock. If you look at the CARA weekly chart, you could see here it had been trading in this tight channel. All right, so you can see the tight channel here, and you know, this is the bottom of the channel, and this is the top of the channel, and so this is the bottom. And so, you know, it came out, you know, did the little double bottom off the bottom of the channel, and then what happened was is it broke out above the top of the channel, above the high close from January. Each candle here is a 1 week of trading, and so it's the above the high from January, and then also from the high from back here in July. So this was a huge move. The next big level to break is going to be this 18 level. This is the high close from back here in March of 2017, about 1850 or so. If it can get above that level and get a weekly close above, then you'd be looking for a run back up in the 20s, around 2250 for the all-time. I don't know if that's the all-time high close. I'll have to check, but for the high close here in June. So yeah, so this is a really nice move. PSAR bull flip, big volume spike. You know, you've got the MACD bull crosses on both time frames. And so what needs to happen is it needs to stay above this $15 level. If it dropped below 15, it could get back in this channel. That's the key support level to hold. It is now above that 50-week moving average at 1360. The close above that level last week does signal more upside potential. Okay, let's look at ticker symbol VTGN. Closed up 51%. This was the big percentage gainer. You know, it basically what happened here is you've got the black candle. That's the most important thing on the chart. It had the open up here, and then it ran up to high of day, and then it pulled back, and look how it closed way down here below the open. And so even though it was up on the day, the close the day before was the bottom of this red candle way down here, and even though there was a big gap up open, you know, it ended up closing well below you know, where it started the day. And even though it was up on the day, it was still closed below the open. That forms the black candle. On some charts, this would be a hollow red candle. If you look at when this is formed before, you could see it had the black candle and it did pull back. You know, it had one here and it took a pause. We'll have to see. You know, there's a black candle over here with the pullback. You know, many times they will retrace when this pattern forms. Notice the upper Bollinger Band is way down here. We wind up with that 200-day simple moving average at 123. There's a gap between high of day on Thursday and then low of day right here on Friday, and so if it did drop below that 140 level, it could start to fill the gap. You'd want to see, but I'm not saying that gap's going to fill, but it could. You know, this has a history of filling gaps in the past. If the big level to hold, if it dropped right now, the main thing is this 300-day simple moving average, the blue line at 146. It has to hold that level. It closed above it on Friday. If it were to drop below, then it could drop down to that 200-day simple moving average at 123. You'd want to see a bounce off of that level. Just below is the 100-day simple moving average at 115. To the upside, you know, if it can get above the high close here in March, that 150 level, then you've got the high close over here in January, around 172 or so, and then you've got the up here around 180. That was, you know, this is the zone that it topped out at. If it can get above both those, it could run up to $2. That's where the high close was from back in December. So that would be the upward target if it could get a reversal going from the sell-off after the big open. You could see the open on the 5th. This is the VTGN and 15-minute chart. It had the black candle at the open with the big volume spike, and you could see they faded the day out, faded the rally. They were able to pull it down. It got below the middle Bollinger Band here, and so it has to get back above that level currently at 151 basically. If you see it above 151 and then 160 is the next level, if it can get above 160, that'd be really bullish. If it could start forming candles above that level on the 15-minute chart. If it were to drop below this 142 level, this is the low close of the day on Friday, then you could possibly see it drop down here to the 50 simple moving average at 126. Okay, let's look at ADOM, another 50% gainer on Friday. So yeah, this had a nice bounce. This was a good bounce play. Yeah, we did alert the bounce was happening early in the day in the chat, and then it did end up following through really nicely. We weren't sure if it was going to get above that 100-day simple moving average at 138. It busted through that level. It ended up closing above, so that's exactly what you want to see. There was a close above that level on the 21st. That's the gold line, and then it pulled back. It bounced off of EMA 8, the lime line, and then you could see the open on Friday was right off of EMA 13 at 108, and then the close back above is really bullish. Right now it needs to break that closing price on the 21st. That's the top of this white candle. If it can get above that level, then the $2 level will be a big one, and then you have support from over here in December, which is around that 230. 240 level, and then ultimately, if it were to turn that 100-day simple moving average into support, you'd want it to work its way back up to that 200-day simple moving average at 402. It will likely take a while for that to happen. If it did break through 2 and 240, that would be really bullish. You could see it possibly test that level. Now if it stalls out here at this 175, or if it were to drop back below the 100-day simple moving average at 138, that would signal consolidation. It needs to stay above that gold line now that it closed above. Notice the nice volume. It was huge volume on the move up, and then notice the light volume on the pullback, and then big volume again on the up day. That's exactly what you want to see if you're a bull. You want to see the big volume spikes green, and the big volume bars green, and then the small volume bars red. And then notice it was a declining volume pattern. That signaled the bounce. So that's performing really nicely. Okay, let's look at PXS. Closed up 21% on Friday. So this is RSI at 62. Fasto is trying to heat up here. It had the pullback. Okay, so it came up and hit the key resistance zone, which is the 200 and 300-day simple moving averages. It basically 180 to 186, and the high of day was what, 174, and yeah, it basically it has to get above that level to break out higher. It's in a channel right now, and so you have a channel where it's trading between this 140s and down here below $1 in the 90s range. You could see this channel. I could make it tighter. It's even tighter the last 2 months. But basically, it's got to get above this 140 to 150 level, and then if it can close above that level, then you could see that 200 and 300-day simple moving average tested. Okay, what you're watching for on Monday is this gold line, and that's the 100-day simple moving average currently at 135. If you see a break above that level, that'll signal that it's in play, because it'll be in play on a break above, but then it'll need to close above. It has to close above that level to signal it wants to head higher. If it keeps closing below that 100-day simple moving average, it'll signal it's not ready to go. And as you can see from this really tight pattern here, it can channel for weeks. And so these kind of plays are best when they close above resistance. It broke above the 100-day simple moving average intraday, but it's the close that counts. Many times with these penny stocks, it helps to wait and to watch until end of day to see if it does close above resistance before taking a new position. Okay, when it's a crucial level like that and it's being tested. Okay, let's look at MLNT. Closed up nearly 18%, and so this is what we call a dead cat bounce play, right? It's in a long downtrend, and then it had the gap downs. There's a gap between these two candles, low of day on this candle and high of day on this candle, and there's a gap between low of day on this candle and high of day on this candle down here, and the gap did fill on Friday. So the first gap filled. There's still a second gap above that's unfilled up to that $7 level. It needs to stay above EMA 4, currently at 619. If it could stay above that level, successful, get past EMA 8 at 60.55, you know, it could possibly try to fill that gap. It needs to get above the middle Bollinger Band at 711 to get a new uptrend going. Check out the big volume spike down here at the bottom of the chart. So they really, you know, it looks like they loaded heavy on that doji down there. And so, yeah, this was nice follow through. We'll see if it can follow through this week. It has some good volume going. It just needs to break through a resistance. Okay, take a look at ARQL. This is a really nice uptrend. Check out that nice multi-week run there. Just keeps pushing and pushing and pushing. It is riding EMA 4 support at 456 higher. A close below would signal that it's cooling down. Check out the big volume spike on Friday. Bearish 3 gap ups reversal pattern did form. So that does signal that it is frothy. I mean, you could tell by the chart here that it is a frothy pattern. I mean, it's up multiple days in a row. So what you have to look out for is the chart cooling down. As long as the EMA 4 is holding, the signals to keep riding. Well, once it breaks, you could get some consolidation. It could take a breather. And so while it's pushing, you know, that's the signal that the chart's super strong. And so keep an eye out for a close below EMA 4 to signal it's cooling down. If you look at the 15-minute chart for ARQL, you can see it's just been on this really nice uptrend. And so it needs to break above the high close up here, that 525 level or so. And if it can get above that level and start forming candles, that'll signal it wants to head higher. If it fails to make a new high, if you see it failing to break above that 525 level, then that, you know, 523, that would be a signal that it's cooling down. And then watch the $5 level. That's the middle Bollinger Band right now. If it drops below the middle Bollinger Band, it could take a breather and come down and test the 50 simple moving average at 472. If you look over here, you know, it got below the middle Bollinger Band, and then it came down to here, got below the middle Bollinger Band, came down and tested it. So you know, that would be a signal it's cooling down. You know, the middle Bollinger Band hasn't broke. You know, it broke intraday here, it bounced off right here. You know, it held right here. So a close below the middle Bollinger Band would be a bearish change in trend, and that would be your clue that the chart is starting to consolidate. Okay, let's look at SHOS. Okay, this is Sears, hometown, and outlet stores. All right, so it closed up 15%. Very low volume, only 245,000 shares traded. It does have a bullish chart going. You have an RSI at 64, so there's still room to run until 70. It is frothy on Fasto at 98 there. It closed above high close resistance, above the closing price here on the 21st, and back above that 300-day simple moving average at 243. If it could stay above this 250, you know, above this closing price, you know, it's like around 255 or so, that would be bullish. And then what you're looking for is a run up to the bottom of the gap. There's a gap between high of day on this candle and low of day on this candle, and so 290 is the bottom of the gap, and so that's the next target. If it could fill a run up to 310 would fill the gap, and then the recent high is up here at 355. Now if it did drop back below the support here, that would signal it's not ready to go. As you can see here, the moving averages are all converged. It's got the 50, 100, and 300-day simple moving averages all right in the same zone, and so you want to just see it stay above that top moving average, which is the 300-day simple moving average at 243. As long as that's holding and the candles are riding EMA's 4 and 8 support higher, the signal is more upside potential. Okay, now let's take a look at Sears Holdings. Okay, so what's that look like, since the other kind of weird one that I really don't know much about, that one is doing well. Let's see how the one everybody knows about. Everybody knows Sears, right? So it closed up 5%. And so it has a nice uptrend going actually on the daily chart. It bounced off of the middle Bollinger Band, currently at 332. You can see it's in the middle of this channel. So you know, this is the bottom of the channel right here on the green line. And then you have that's ascending support, and then you have ascending resistance on the top of the channel. And so right now the top of the channel is putting it up here between 420 and 445. And so if it got a break above 380, that's the big level to break next week. Then it could possibly run up there and test that 200-day simple moving average resistance zone and the top of the channel. You know, 380 is going to be the big one. If it stalls out at 380, that could be a temporary top. Now, if it dropped below the middle Bollinger Band at 332, it could consolidate. And down here at the bottom of the channel is the 50-day simple moving average at 304. 4. That would need to hold. You know, that's been very strong support for the last couple months. If there were a close below, that would signal downside risk. You have the 100-day simple moving average just below at 289. Okay, let's look at OPGN, closed up 11%. All right, so you've got the chart trying to heat up here. You know, as you can see, you've got RSI at 61 and Fasto at 77, and you've got a bullish crossover here. And so it's been pushing for the last 3 days on very light volume. You know, it started down here at 175. Now it's up here at 213. It closed above high close resistance from May, just slightly above, and then it has this black candle. The bottom of a black candle is the closing price, and so it hit that zone and pulled back. If it can close above that level, then it could possibly run up to the top of this recent trading range from March, which would be just below 250. And basically what you're looking for is a run up here to this 100-day simple moving average at 258. Just above that at $3 is a gap. There's a gap between high of day on that candle and low of day on this candle. And so, yeah, if it could keep an eye on it this week, you know, if you start seeing it trading above that 220 level, you know, it could heat up, possibly make a run up to 240, 250, and maybe even test that 100-day simple moving average at 258. Okay, let's look at VKTX, closed up 8%. And so, yeah, it made a nice bullish close on Friday. It also closed above high close horizontal resistance from the top of this white candle right here. And so that signals more upside potential. Whenever you have an uptrend going, a new uptrend started when it closed above that dotted purple line. That's the middle Bollinger Band, also the 20-day simple moving average. And then the candles have been heading higher. And it has to keep making new high closes to signal it wants to keep pushing higher. And so the close above 530 is signaling that it could keep the uptrend going. So right now, the big level to hold is the 100-day simple moving average at 517. That's the gold line right here. If it stays above 517, it stays above 530, keep an eye on it. It could keep retracing. You know, the high from February is up here at 690. And so that would, you know, if it keeps retracing back up to the previous high after coming down here and bottoming, you know, that would be the eventual target if the uptrend continued. Now, if it dropped below that 100-day simple moving average, it would signal it's not ready. You know, it's going to possibly, you know, would signal consolidation and a risk to hold. Okay, let's look at QUIK, closed up nearly 15%. This had the big dead cat bounce on Friday. You can see there's a gap between low of day in this candle and high of day in this candle, and so you know, it bounced on Friday. This is the gap between that candle and this candle, and so basically, yeah, now the candles have worked their way back into the bands. You can see this is the lower Bollinger Band, the purple line right here, and so it closed back into the bands after this candle closed well below, and they work into the bands, sometimes sideways, you know, sometimes down, but when you get that big gap down, you know, that's a signal that's getting really frothy to the downside, and the candles are likely to work back into the bands. And so after they get past that lower Bollinger Band, the next key level to break is EMA 4, and that's at 133. So that's the big level on Monday or Tuesday, and so keep an eye on EMA 4 tomorrow. If that fails to break when tested, it could signal a temporary top. If you look at QUIK on the 15-minute chart, you can see it did get above the middle Bollinger Band on Thursday, and then it ended up closing below. But on Friday, it was back above that level, and you can see it stayed above that dotted purple line, and then it opened above the bottom of the gap. The gap is the top of this candle right here. The bottom of the gap level is the top of this candle, and so right here, this top of this candle, and so it did the high of day for Thursday is the bottom of the gap, and so you can see it opened above that level, and then it ended up getting above the 50 simple moving average as well. That's the green line, and so that's really bullish. What you want to see now is a break above 125. That's the you know, the top from here on at 130, and if you see it break above 125, the upside potential is it runs up to that 100-day simple moving average at 136. Notice how that lines up with the EMA 4 at 133. You know, so it's putting, but both charts are putting the 130s as the next resistance level if it can get above 125. Okay, let's look at BGI. Okay, finally, this closed up 15%, very low volume type stock. keep an eye on it. It's hitting the key resistance level. It had a little volume spike for this thinly traded stock. So I mean, yeah, and I mean, this was like the big volume day. So be very careful. I'm just showing it to you because you never know. They've been running all these stocks, and it is it's in the right sector right now. It's in the cyclical apparel retailers, and you know, with all the retail stocks reporting last week and the week before, you've got a lot of retail sector stocks that are in play right now. That was the hot, you know, the sector that everybody's talking about. So this heated up, and so basically, to make a long story short, it just has to get above the two key levels, and that's the 100 and 200-day simple moving averages. You can see it stalled out at that 300-day simple moving average at 149. If you see it trading above 154 tomorrow, that's going to signal upside potential. Keep in mind, you know, this would be, more than likely, if it got going, you know, it would be like a quick trade kind of thing. Because look at the upper wick on this thing. You know, it ran up to 275 and pulled back. So if you start seeing the upper wick forming, you know, just keep in mind that's a major red flag. Look at all the upper wicks on the candles here. So that each time there's an upper wick like that, it's a sign that they're dumping shares. You know, and so yeah, and so just we'll see. It could break out and take off higher, and this could be where it finally does. It's above the 50 and 100-day simple moving averages and above the middle Bollinger Band, and it did close above, you know, resistance. It's above the top of the channel, so there's the channel right there. And so you could see the top was this candle right here on the 8th of May, and so that was the high close. You know, there was another high close back here, but this that close above all these candles here for the last 4 months does signal upside potential. So I would say keep an eye on this thinly traded stock. You know, it did have some big volume in March, and that's what you want to see. You want to see, you know, people want to trade it and have volume come in, and maybe it could run back up into the twos. All right, thanks for viewing this video. Please come check out the chat. You got to send me a private message in the chat. I'll post the link in the video. Okay, thanks.